Hi everyone, welcome to week 4 practice exercises. Our content today is job order costing. We have a problem set that deals with journalizing the flow of materials, labor, and factory overhead into the finished goods account. The second and third problem sets will demonstrate how inventory cost assumptions can change how we report product costs. So let's go ahead and get started. With our first problem set, it is Greyfriar Publishing Incorporated began operations on March 1st. Jobs 301 and 302 were completed during the month, and we can see the costs of job 301 and 302 listed below. Jobs 303 and 304 are still in process. So we've added some direct materials and direct labor, but we haven't applied any of the factory overhead. So in addition to the materials and the labor that we've already charged, we have an additional 2,740 of indirect materials and 33,140 in indirect labor. So our job, our first job at least, is to journalize the direct and indirect materials used. So this is going to be kind of easy. We have all of that information here. We have our direct materials for all 4 jobs. So if you look, I've already calculated it. I picked up the direct materials for 301, 302, 303, and 304. I'm just going to change the color on this so that we can see it, and that total is 87,540. Now we want to pick up our factory overhead. Now we don't have all of our factory overhead, so they're not really talking about that. They're talking about the factory overhead that's related to materials. And we were told in the narrative that we have 2,740 in indirect materials. Indirect materials is part of your overhead. So I'm going to change that color. We have 2,740. And these are natural debit balance accounts. Materials is also a natural debit balance, but we're taking those materials out of our raw materials account and putting them into work in process and a little bit into factory overhead for those indirect materials. So I'm just going to sum the work in process and the factory overhead, and that gives us a total of 90,280. So we have journalized the use of the direct and indirect materials for all 4 jobs. Our next job is to journalize the direct and indirect labor. And I'm going to hide this so that we can see all of the information. All right. So we're going to do the same thing for work in process. That's going to be our direct labor. So again, I just picked up the cost for all 4 jobs, and we'll turn that color so that we can see what it is. It is 30,100. Now again, we have our factory overhead, but this is factory overhead that's related to our indirect labor. Up in the narrative again, we see that we have 30,140 that's related to indirect labor. So that's what we want to capture down here. 30,140. We're going to sum that up for our wages payable, and we now see that our indirect and direct labor is going to be 60,240. Again, I'm going to hide this so that we can move on to our next question. Now we need to journalize the applied factory overhead. Factory overhead is applied to all 4 jobs, but you can see we don't have anything listed here. We're going to operate under the assumption that there is a single overhead rate, and that rate is based on direct labor costs. So again, this is kind of a 3-step process. We first have to determine the predetermined overhead rate. Then we have to determine the total direct labor costs and multiply it by the predetermined overhead rate, and then we get to post it in our accounts. So we have jobs 301 and 302. again, we're just going to pick up the direct labor for 301 and 302. I'll just go ahead and open this up so that you can see. So I pulled in the direct labor, 10,900, and for job 302, it's 5,600. I want to see what my factory overhead rate was for both of those jobs. So I pulled in again the factory overhead rate for 301, the factory overhead rate, the factory overhead rate for each job, 301 and 302. And then I want to calculate the percentage. And we can do that by taking our factory overhead rate and dividing it by direct labor. And again, the reason that we do this is because our single overhead rate that we use is based on direct labor costs. Now, in real life, you wouldn't back into the percentage. You would actually already know what your percentage or your application rate is. But in this case, we're going to calculate our percentage so that we can then determine how much factory overhead we apply to jobs 303 and 304. So we're going to drop down here to step number 2. We're going to determine the total direct labor costs, and then we're going to multiply it by that predetermined overhead rate. So our total direct labor cost, we calculated that a little earlier. Again, I just picked up all 4 jobs, and then we calculated our predetermined overhead rate just one step ago, so I'll open that up. And so all I'm going to do now is multiply those 2 items together. That gives me a total of 16,555. So now we want to add that factory overhead into the work in process. That's 16,555 debiting work in process and 6,555 crediting factory overhead rate. We have to remember that our work in process is an asset account. So as we're building these assets, that means we need to book all of those costs in an asset account. Okay, so step 3 is done. We're going to hide that one. We're going to move on to journalizing the completion of job 301 and 302, because we were told in the problem set that these 2 were the 2 jobs that were finished at the end of the month. So what we're actually going to end up doing is taking the total, and I picked that total up by summing job 301 and 302. And that is the cost that we are going to transfer over into our finished goods account. All right. We're going to go ahead and move to calculating the cost of materials issued. And this is where we're going to talk a little bit about inventory costing assumptions. Now, up here in our last problem set, we had direct materials. We have to ask ourselves, what are those direct material costs based on? Are they based on first in, first out, which is what we're going to start with first? Or did the company that you're working for, did they choose a different inventory cost assumption? Maybe they use average costing, or they use where they can actually identify which material they're using and how much that one piece cost. So each one of your different inventory costing assumptions impact how much your product cost that you report. All right, let's go ahead and step through it so that we can see what this looks like. Okay, the first thing that we're going to do is we're going to calculate the cost of material issuance under the FIFO method, and FIFO means first in, first out. So I've calculated most of this for you because it's a little complex to walk through. We start out our month, May 1st, with 285 units sitting in our warehouse. We know that the cost of those 285 units were $30 a piece. So if we had to calculate and say, well, how much do we have in inventory on May 1st, then that would be $8,500. 550, right? Well, on May 4th, we actually had ordered some more materials and we received it on May 4th. We received 130 units and each one of those units cost us $32. So we're going to add that into our inventory. And you can see here that all I did was extend that amount. On May 10th, someone in the company said, "Hey, I need 360 units issued to me." So we want to take that out of the cost accounting system. But I don't have 365 units at the cost of $30 a piece. I only have 285. So I actually removed that from my inventory, my cost accounting system, 285 at the $30. But that's not what your production floor ordered. They ordered 365. So I take the other 80 units at the cost of $32 a piece to give my production floor exactly what they need. So the total cost is going to be the 285 at $30 and the 80 units at $32. And that amount is $11,110. And that is just the sum of those two numbers. On May 21st, we received some more inventory. This time I received 110 units and the unit price was $38. Again, all I've done is extended that cost. And then on May 27th, the same thing happened. We realized that the production floor needed 100 additional units. Again, we didn't have 100 units at the $32, right? We only had 50 units left at the $32. So I issue them 50 units at $32, and then the other 50 units are issued at the higher price of $38. That gives me a total cost for this particular issuance of $3,500, and then the full cost for the whole month will be the summation of these two, which is $14,610. So if we were to look back up at the last job or the last problem, that $16,000 would sit in the direct materials line. But what if in the middle of your year, someone said, "Hey, I really don't like this FIFO method. I don't think that it captures our costs very accurately. I think we need to move on to looking at the average cost." So how would the average cost impact your total product cost for the month? So I went ahead and laid out two tables. One is the cost of the materials purchased, and the other is the cost of the materials issued. So on May 1st, we walked into the building and we knew that we had 285 units at $30 a piece for a total of $8,550. On May 4th, we ordered some more units. We ordered 130. The cost was $32, and so we extended that amount, $4,160. And then on May 21st, we ordered some more. We received 110 units at $38 for a total of $4,180. So then I just want to subtotal this. I want to see what's going on. And I see that throughout the month, if we looked at everything that was available for us to use throughout the month, we had 525 units for a total cost of $16,890. But now I want to look at what is my average unit cost. The average unit cost is really just going to be your total cost divided by your total units. So that was $32.17. Now my last step is to calculate the cost of the materials issued. We issued 2 batches of materials, one on the 10th and one on the 27th. So on the 10th, we issued 365. we're using our average unit cost, which is $32.17, for an extended amount of $11,742. On May 27th, we issued 100 units. It's the same amount. And that total cost was $3,217. That gives us a total cost of $14,959 and some change. And we can see right off the bat that the average cost for this month ends up being more than if we use the FIFO method. Now, the question that you should probably ask is, well, is this a good thing or is this a bad thing? And the answer is that it really does depend. At the very end of the day, unless you have a significant amount of obsolescence, then this is actually probably going to even out throughout the year. Something else that's going to impact how these costs increase or decrease your total product cost is whether you are in an environment of increasing product costs, increasing raw material costs, or decreasing raw material costs. So this is our lesson for today. Hopefully you understand a little bit more about the job costing, how we accumulate costs, and how we journalize those costs, and how we transfer them from one account to the next. Thanks for joining me, and I'll see you in the next video.